As reported by Canadian Real Estate Wealth, the average age of a first-time homebuyer in Canada is approximately 36 years of age. While it's not too old, it's relatively late compared to other major milestones in life. For example, the average Canadian university grad is around 25 years old, and the average Canadian couple gets married and starts a family around 29 years old. This means that buying a home may very well be one of the later steps you take in life. Hi, my name is Brandon, and I'm a certified financial planner. If you enjoy this video, please hit the like button and subscribe. Having a clear direction in life is the first step before you begin looking for real estate. Unless it's a rental property, you'll consider where you'd like to live long term. Then you can conduct market research on the estimated prices of apartments, townhouses, or homes. The first step is to save a down payment. A down payment is the initial amount of your money that you put towards purchasing a home. The larger the down payment, the easier it may be to obtain a mortgage. When you begin saving for a down payment, you may wonder, how much do I need to save? The minimum amount depends on the price of the home you plan to purchase. A down payment in Canada typically amounts between 5 and 20% of the purchase price at a minimum. You can also avoid paying the Canada Mortgage and Housing Corporation, or CMHC, mortgage default insurance by raising your down payment. This hefty expense is calculated based on the amount of the mortgage and down payment. When the purchase price is below $1 million, 5% is required. Otherwise, 20% down payment is required. You should also be aware of the impact that CMHC premiums may have on your holding costs. This requirement is designed to protect the lender and is usually only possible to be waived with a down payment amount of 20% or more. Additionally, closing costs need to be considered. There are legal and administrative fees paid at the closing of a real estate transaction, generally between 1.5% and 4% of the selling price. Saving for these expenses before buying a home will prevent you from being in the red when it's time to close. So start saving now. You should also prepare your finances by checking your credit score. Be sure to have a good understanding of your cash flow and budget before beginning your search. This process will help determine how much you can afford to buy, as well as organizing the necessary documents to support the mortgage application. The CMHC recommends that your monthly housing costs not exceed 35% of your gross monthly income, which includes costs such as your mortgage payments and utilities. Your entire monthly debt load should never be more than 42% of your gross monthly income, including your mortgage payments and other debts. Having your financial documents in order will enable you to determine the amount you can afford. You can create a budget using AdvisorFlow, which we'll link down below. This can help account for your down payment, the amortization schedule, sale price, etc. Alternatively, you can ask your mortgage lender to help you get pre-approved. This means that a potential mortgage lender will look at your finances and determine how much they're willing to lend to you and at which interest rate. Once you're serious though, it's recommended you speak with an independent broker in addition to the financial institution you typically deal with to ensure that you're receiving a competitive offer. It's a good idea to know your credit score before putting in all this effort. A credit score is a rating between 300 and 900 used by lenders to assess the amount of risk they'll face in lending you money. Generally, the lower your credit score, the less likely they will be to approve your loan. The purpose of checking your credit rating is to determine where you fall on that scale and determine the necessary steps you need in order to improve your credit score before submitting the mortgage application. It is possible to improve your score if it's lower than you'd like. A little tip for you when you're organizing your finances: to ensure a successful real estate transaction, you should establish a relationship with a trusted real estate and mortgage professional. This may not necessarily be the first person you meet, since these individuals will assist with one of the most significant transactions of your life. If you want to know more on how to pick one, comment down below and we'll get back to you. Thanks for watching today's video. If you enjoyed, please be sure to leave a like and follow, and we'll see you in the next one.